Hi, this is Zak Mir with the Bulletin Board Heroes, the weekend edition here at Zak's Traders Cafe for Sunday, the 14th of May. Starting off with the FTSE 100, which had a rather quiet week, dancing either side of that blue 50-day moving average, currently around 77.25, and little dips towards 7,700 in the meantime, and spikes towards 7,800. So we're really looking for an end-of-day close above 7,800 to give us 79.20 or so in that February resistance line. On the downside, the risk is down to April support there around the 76.30 area. If you're looking for a trigger, apart from the end-of-day close above 7,800, then it would be an end-of-day close for the RSI back above neutral 50. We're still below that neutral 50 level, and therefore that's why we have a risk of maybe 76.30 before we finally turn around. Onto the DAX, which is not quite so squeamish in terms of the bull argument. Here we've remained above the old February-March resistance, 15,700 for weeks. Sideways consolidation above the 50-day line, which is a very strong place to be. We're looking for an end-of-day close through 16,000 to give us 16,750, maybe as soon as the end of next month, but probably delaying on the end of this month. Now we're looking for around 16,500 for the end of this month. On the downside, below 15,700, there's the risk of 15,500 at the floor of that rising September trend channel and the current area of the 50-day moving average. Onto the Dow, where we still live in hope that one day we'll break that old April resistance line from last year. Obviously, it may not be that soon. You can see that there around 34,000. Currently just testing the 50-day line, which is still rising, thankfully, around 33,100. We bounced off that. A lot of dancing around there, sort of like the FTSE, really. Got the RSI below the neutral 50 level at 45, so that does suggest there's a risk of a test of 32,600 and the 200-day line, the grey line there, even if we then break the 34,000 level and head up to the top of that September rising trend channel at 36,800 over the course of the summer. But at the moment, still hoping that the 50-day line will stem any of the recent setbacks. Moving on to Bitcoin, and here, disappointing, I think, is the description, although we've managed to so far see that old 26,700 support area, a bit of a dip just below it yesterday, but otherwise holding that sort of area. Above that, then we're looking for a return to the 50-day line at 28,600, but we really need to see a break above that to give us the chance of a fresh move to the upside after, well, nearly 6 weeks on a downturn up towards that June 2022 resistance line projection, now heading for 34,600. Worst case at the moment is probably just a test of February resistance at 25,000, but not expecting worse than that at this stage, even though the RSI is at 37 and now approaching the oversold area. Onto the stocks of the week, and for the weekend rather. One of the stocks of the week was Cellular Goods. And here you can see that the shares finished the week with a decent up day above the 200-day moving average at 1.2 pence, and that is key, along with the way that we've got a rising 50-day line. That does suggest that we can not only take out the top of that rising trend channel from November there at 1.6 or retest it, but above 1.6 on an end-of-day close, looking for 2.6 pence at the top of that rising September trend channel. But the key here, I suppose, rather obviously, is that we hold the 1 pence zone on an end-of-day close basis, but interesting to see a turnaround there. Onto a stock which some people were willing higher a little while back, but the shares rather disappointed. Here we've got another go for IOG, trying to bounce off the support area either side of the 50-day moving average at 4.75 pence. Above that, we're looking for the shares to hit that resistance line there from back in September, which is currently running around the 10 pence area. The 8 pence area. The initial target here up to 7 pence at the top of that rising trend channel from February. So basically, just to sum it up again, 4.75, 7 pence, and then 8 pence, the levels on IOG, and we're backed by an extended rising uptrend line in the RSI window. So that is the reason really for including the shares today and looking for 7 or 8p off the back of that. That sort of multiple testing there does not normally fail. Moving along to stock which hasn't had a look in here for quite some time, Ovoca Bio. Here we're trying to break the resistance. Well, we have broken the resistance line there from October. That was around 6.3 pence. So just trying to clear the 200-day line at 6.8, but looking for 9 pence as soon as the end of next month, while we hold above 5.5 pence and the rising 50-day moving average. Again, a multi-tested extended uptrend line in the RSI window gives us confidence that this is the turnaround that we've been looking for, and 9 pence will be on its way. Stock which is doing nicely at the moment is Oriole Resources. Here we've got the shares having delivered a rather rare setup in the current market. Golden cross on Friday and a key reversal to the upside as well. So the view now is that the longer we stay above the 0.2 pence area, the greater the chance of a move to 0.4 as soon as the end of next month. So getting excited with that bullish, with that golden cross, and also with the broadening triangle there on the daily chart since back in July. So let's see if we can get that only really back below the 50 and 200-day lines of 0.15, killing the idea of recovery there. Another surprise turnaround has come from Panthera Resources, where we can see the picture is looking like it is in recovery as well. Bullish divergence there, quite strong bullish divergence, a much lower low there for April, but RSI much higher. Here we're looking for well, we've already had our end of day close above the top of the September triangle, and we're looking for a retest of 7.5 pence March resistance over the next 2 to 4 weeks. Early really back below the 50-day line, now rising at 4.5 pence, delaying the idea of a sharp push to the upside. Company I interviewed a few weeks ago is Pix Resources, and this looks as though it's finally turning around after a long time in the wilderness. The break of that resistance line from January on a weekly close basis at 19.3 pence suggests that we could head towards the 200-day moving average as high as 34 pence, but maybe the immediate target here would be towards 27 pence and the top of a broadening triangle from the start of the floor of that triangle, like that. Only back below the 50-day line, really sort of delaying the idea that this is going to take off. On to stock which maybe is not for widows and orphans, Revolution Bars. Here we've had obviously a rather painful decline for the stock, but we broke above the 50-day line on Friday to end the week, and above that 50-day moving average at 6 3/4. Keen traders might be looking for 9.5 pence at the top of the late December rising trend channel. But as I said, that stock maybe not for everyone. On to Synergia Energy, and here you can see the shares have made reasonable progress over the last week, bouncing off the 200-day line, and that's around 0.11 pence above that, looking for 0.22 as soon as the end of next month. Good to see the 50 and 200-day lines starting to rise. Moving along to a stock which is not quite as well followed as Synergia. You'll see what it is in a second. Here we've got Smart Space, and the situation here is that we've had a recovery in place over the bulk of this week. Rising trend channel there from back in September. Top of that channel around 56 pence. Above that, we're looking for a new higher ground, maybe as high as 95 pence over the next 2 to 3 months. So maybe by the end of July, something like that. But the longer we stay above 45 pence initial May resistance, the greater the chance of a move to the top of that rising trend channel. Just a few to go now. First one is THG. Here we have one of the most painful charts of recent times and the most painful situations as well. Nothing worse than a bid getting blown out of the water, a potential deal getting blown out of the water. We had that mysterious pullback on May the 4th, where the shares just hit that top of that rising trend channel, then fell back towards 80 pence, in fact. So the range of that day, 116 to 81 pence. So as I said in my commentary during the week, as though somebody successfully guessed that there was nothing going to happen here. Current position is that we're right on key support at 57 pence in terms of the low of Friday. That's the main January support line. We do not want to see the shares go back below that. In the meantime, there's a chance of a dead cat bounce to fill that gap there up to 74 pence. So let's see who wins there. RSI well below the neutral 50 level, and I think it's one of those situations that you probably only want to be facing on the bullish side if the RSI is over 50. You can see that the shares pushed through RSI 50 back in March, and that took the stock from 60 to nearly £1.20. So I think there's probably a lesson there. On to the final two, and the first situation is one which is, well, actually both got companies with something in common. First one is Zanaga, and here we've had a decent recovery here over the recent past. Broadening triangle to the upside, September resistance line projection heading for as high as 13 pence, and hopefully we'll see that by the end of next month, while we remain above recent support at 8 pence. The other thing to note is that we had an unfilled gap to the upside at the beginning of April, and such sort of setups through the 50-day line tend to be very strong indeed, and that has proved to be the case so far. On to Zinnwald, which is another company which is impressive, a company I've interviewed recently, and here you can see the shares managed to hit the initial target there that we had, or one of the initial targets, at 14 pence. Above that, we're looking for 22 pence as soon as the end of next month. Again, an unfilled gap to the upside, in this case above the 50 and 200-day moving averages. There was also a golden cross back in March, and also we've got an extended RSI uptrend line in place since December. So multiple unrelated bullish points on the daily chart there. That's it for me today. More updates during the week.